What up, everybody? Welcome to yet another class. All right, we're gonna go over what we expect the market to do this upcoming week. We got a huge week. It's election week. It's also FOMC, but we also gonna talk about some gems we could pull out of last week's price action because last week did have some cool gems to pull out that I want to talk to y'all about, especially getting precision in such a crazy range. Like, how the heck do you get precision in such a crazy range? Let's talk about it because we were pretty much right about just about everything we said would happen. We've been correct. So I want to tell y'all how we knew the things we said. All right. So this is what Monday is, this little, section right here. I'm on a 4 hour. Tuesday is starting up right here. So if you guys remember, I'm gonna go to the hourly now. If you guys remember, like Monday of last week was pretty uneventful. Pretty uneventful. Tuesday started off uneventful, but then like overnight, but then in the New York session, it really pushed up, and I'm gonna show you that in a second. But I do want to just kind of zoom out and show you the type of price action we've been dealing with. Is really we've been in a consolidation. So any given consolidation, I think is good for you to know the highs and the lows of the consolidation because the best trade opportunities will exist outside of a consolidation. How many times have you heard me say that over the past multiple months now, where I say inside of a consolidation, everything is low probability, but on the outside, that's where your trade opportunities exist, truly, right? So, this yellow line here says 717 SIBI, and what I'm referring to is this blue area, right? It's just the bearish fair value gap that we have here from the daily chart. And that's because that's an area that I'm expecting price to reject in order to make new lows in the market. I've been saying this literally since August 25th in the same free class. So it's on YouTube already, it's on recording. You guys have heard me talk about this area for quite some time. And I've been vocal about saying that I'm expecting NASDAQ to potentially make a lower high in this area before coming down to these lows, while the S&P 500 makes a higher high, meaning an all-time high, before which they did before potentially coming down to their lows. So notice that the S&P did come higher than these previous highs, and then they're consolidating, and we'll see if this is the next move down. We'll see how that plays out. But my point in bringing up that projection, which we don't know if it's going to be right or not yet, right? But my point is, I'm not exactly bullish. So when I see Tuesday push up how I'm about to show you, just know that in my head, I'm not exactly bullish and I'm not sold on it. That's my point in bringing up the higher time frame perspective. And I think I'll make a quick point and say one reason why I am looking at a SIBI this far away from price action, because I never teach people to look at fair value gaps that are so far away from price action per se. The reason why is because I don't think we met our bearish objective truly, and we've engineered a lot of liquidity on the way up. So I don't truly believe in the upside direction. So all of a sudden, bearish PD arrays in the premium, they stand out to me. All right, so that's why I've been watching this area since August 25th, literally. All right, so now let's go to Tuesday. And so the yellow line is the high of that blue area. The yellow line is the high of that blue area, okay? Now, let's be on Tuesday now. So Tuesday sweeps these lows, pushes up. We love to see a sweep before a big move in the market. We love that. We love that. We love that. So price pushes up. See, notice that on the way up, it makes a BISI. Seeing this BISI not get traded back to is a very good sign if you're a bullish person. That's a good sign that we're gonna run these highs to the left as well, because which is engineered highs, and I'll explain what I mean in a sense in a second. But the thing is, you don't want every fair value gap to get touched before you hit your objective. You don't want to see that. So seeing this get left open is something that should have made you happy if you were in buys that day, or if you were in calls that day, if you play options. Because just so you know, if you trade options, you still should be looking at a futures chart. And I ain't gonna lie to you, I highly recommend it. For example, actually, while I'm on that topic, to convince you options traders again why you should still look at a futures chart if you have real-time data. Because look at these lows right here. These lows is from 11 p.m. and midnight. 11 p.m. and midnight is these two bottom candles. So notice that we swept those lows before this huge move to the upside. For a person who trades options, they have no clue why the heck we're pushing up. They don't know what objective we just met by running those lows. They're just lost. Like price opens up with a gap or something like that. And they're just like, hey, I mean, if I see momentum pushing up to the upside, I might just hop in calls. Like there's no real basis for their trade. But if you had a futures chart, you'll realize like, oh no, I mean, well, we swept the lows from last night. And so that makes sense why we're pushing up this hard, especially with BISIs and stuff. So you start targeting highs from over here. I mean, even look at these highs. What time are these highs? 6 a.m. Not really the type of times you see on the options chart, right? You got 6 a.m. Like, so when we start targeting these highs, and at least this is highs you could have seen on the options chart, because this is at least 10 a.m. I know an options chart to show you a 10 a.m. candle, but even these internal highs here is like, you don't really see it on the options chart. Maybe if you turn on extended hours, you could see 6 a.m., I think, but you definitely would not see the midnight lows. You would have never seen that on extended hours. So if you're not convinced yet, I mean, I don't know what you're waiting on, but you're just missing out on extremely valuable information. So yeah, let's say you got in calls after looking at that sweep. You saw the BISI that doesn't get traded back to. Cool. So you target higher. All right, price moves higher, runs those highs. Beautiful. We got to the target. Now, when you get to this target, you need to keep your eyes open, because at this point, this is where price is on the outside of this consolidation now. Trade opportunities exist. Trade opportunities exist. So I'm gonna now go to the 4-hour for a second and kind of move forward to Wednesday, because I really want to go over Wednesday the most. But we're on the outside of consolidation, so it's imperative that we stay on the outside. You don't want to see this in this scenario. That's not what you want to see. It's not expected. It's not probable. It's not typical. We're not looking for this BISI right here to take price back to the upside. No. If we were really looking to break out to the upside and make a higher high in the market right now, as in like running these all-time highs, right? It's very likely that we would not come back to this BISI down here. I know I use terminology that not everybody knows, because I got a different audience in here every week sometimes. Like, so some people may not know what a BISI is. It's a bullish fair value gap. That's all I'm saying. A bullish fair value gap. If you don't know what a fair value gap is, then ask me after the class recording, and I'll be willing to break it down for you. But all right, so let's keep it going. So my thing is, I'm not even concerned with this fair value gap. I'm only concerned with this, because if we're truly going to go higher, we're going to end up using this 4-hour BISI and VI overlap. We're going to use that to go higher. That's it. So in the morning time, in the Discord, I didn't even whatever you got. If you're in the free community, you'll see the screenshot from Wednesday where I showed you guys the morning plan. The morning plan was, if we're bullish, we're going to use this area to go higher. And then I gave you guys all the upside targets. My bias was for price to invalidate this area so that we can go lower. Why is my bias truly the downside? My bias is the downside because I already told you from a higher time frame perspective, where did I want the rejection to be? Right in this area, right? So I'm not convinced to the upside. I still think they're just manipulating everybody before a move back to the downside. So that's a trade opportunity. That is a trade opportunity. So do I, if you know my higher time frame bias is to the downside, do you think I have faith in this 4-hour BISI? No. So this is, I give a bullish case, because guess what? I could be wrong too. But you guys also already know that I've been bearish on the market. So obviously the bear case that I gave y'all was the one that I had a bias on. And then so let's look how that plays out. So obviously, as you know, we're looking to see if this area could work. So notice that it actually initially started to work. This is the 2 a.m. candle. This is a 3 a.m. candle, 4 a.m., 5, 6, 7. All right, so we're consolidating. Here's something else to keep in mind. If we come into a PD array, right, like this, and we pop up back close to these previous highs like this, you would want to see continuation if we're truly bullish. You don't want to see price come back to those same lows just to do that. Like, that's not really typical. So this is something that I'm already looking at, like the fact that we didn't make a higher high at between 3 and 4 a.m., the fact that we didn't make a higher high is really, really suspect. Something else that was suspect. How about analyzing the delivery of this price leg? So when you look at it from the hourly, it looks like, yo, what a strong move. I agree. It looks beautiful, everybody, on the hourly. But let's get a little more surgical for a second. Do y'all see what it was like to ride this uptrend in real life? So if you were a day trader and you were riding this uptrend, look at the 5 minute. It's a disgusting rally. I did not believe in this rally for a second when this was happening on Tuesday, because I'm like, bro, this is not real movement. So when I tell y'all to study delivery, not just destination, this is what I'm talking about. So the delivery here is disgusting. Like, how do you know it's bad delivery? What do you think it's lacking? Can somebody write in the chat, what is it lacking for real? It's lacking an abundance of what? Anybody? Thank you, Tiffany. Fair value gaps. Thank you, Arjunate, David, right? Fair value gaps. I met everybody in the chat. So whoever is answering fair value gap, y'all all correct. It's lacking fair value gaps. So that's something that I've been vocal about for you guys to be on the lookout for. If you're seeing a price leg that's lacking fair value gaps, your antennas should absolutely be up. Be like, yo, I don't know about this. This is so strange. So yes, this is like doji paradise. Like, there's like 3,000 dojis in this area on their way up. It's like, yeah, this ain't real movement. So the whole day it was like this. Don't get me wrong, you had little segments where, man, even this is lacking fair value gaps. Never mind. Even this little price they didn't have fair value gaps. There was a small one right here though. It's very bad, man. It's very bad. So the whole rally on Tuesday was disgusting. It ended right here. Now, overnight, we already saw we ended up trading back to this fair value gap. So game on now. Now it's like, all right. So once again, the way up is also indication that, like, yo, that wasn't real direction. So you really should be anticipating price to come back down. So when y'all see how price acted as soon as the market opened, you shouldn't even be surprised at this point. Really, before the market opened. So that's 7:55. Let's move it forward a little bit. 8:30. All right, so we got this consolidation, not tradable. I wouldn't say to trade this area. I wouldn't say to trade that. You should wait for order flow to flip bearish for real. But it starts flipping bearish around 8:50, not coincidentally at all. And that's all I'll say to that. Not coincidentally at all, because it's a time-based algorithm. And that's a time that I talk about with my mentees, where you expect a move to potentially occur. So it's not a surprise that this down move that we were looking for started happening at that time. So as you see, price starts to break down. This is what this candle is 9 o'clock. It starts making this move down. At this point, I'm already convinced that we're going to hit minimum, to this hourly BISI minimum. And why did I choose this? I mean, it just showed you what happened, but why did I choose this one? Because although I have a bias that we're going lower, it doesn't mean we have to go lower today. So a low-hanging fruit objective is just saying, you know what? If we invalidate this, we going straight to here. I want you to also notice that, I mean, I guess technically this is still the 4-hour BISI, but let me go to the hourly, never mind. Also notice that although there's an abundance of hourly PD arrays, such as an hourly VI, you have there's a tiny BISI here. There's another hourly BISI right here. Notice I skipped all of those and I went straight to this as the target. So the plan that you had in the free community chat was, for the downside, once we invalidate purple, we're going straight to this area. There's a lot of money to be made between those two areas. You know, we're talking like almost 200 points, which is the equivalent to about 800 ticks. So there's a lot of like room to make money to the downside here. And correct, we're going to a discount, right? I'm not looking at things in a premium. I'm going strictly to a discount BISI there. So, but did I expect this to generate a new high in the market? No. When I was on a live trade with the mentees at this time, I said that at the time as well. I said, so I know we pushing up. That was a nice like PD rate we chose, but I don't expect this to make a higher high. Why do I not expect it to make a higher high, everybody? We already talked about the higher time frame. So when you trade only staring at one time frame, you're doing yourself a disservice, everybody. You need to always keep in mind, what is the higher time frame trying to do? To me, if we were bullish, honestly, we would have never even visited this fair value gap in the first place. If we really want to talk about it, we really would have never came here in the first place. But it's cool. If we did, we better use it. That is the only thing that would have me thinking we're bullish if that were to happen. Next, but instead, when you see us make a failure swing, meaning that we failed to take the previous highs and then we start pushing down, that's a failure swing. When you make a failure swing after that, the market already snitched on itself. Like, it just snitched on the market makers. Like, hey, listen, we going down. We're going lower. So at that point, when I see, yes, there's a BISI here, which is a bullish PD array, which means we're supposed to use this to make higher highs. No, to me, it's about to give us what? Another failure swing. It's going to be a failure swing in this direction now. That's it. That's what it's expected to do to me. All right, so now let's look at the 5 and see how it delivers. Actually, I'll go to the 1 into market open. So that's 904. Notice it starts consolidating closer to market open. The closer you get to 930, the less probable it is. I always suggest to just wait till 930 versus trying to trade into that time, because that's 930 is usually where you start to actually see real movement. All right, 931. All right, so now we start our journey. We get to the destination. Pretty easy, right? If from here to here, easy money, easy money. This is an easy trade. This little cluster of candles is not easy to hold if you just got in here. So also something I want you to keep in mind, a takeaway is, if you're not getting in towards the top of a move and you're getting in towards the lower sides of the move, you have to be careful trading consolidation, because there could be a lot of like wiki price action that may stop you out before going. And so I always suggest to lower your leverage. If you're just now finding a trade, lower your leverage. Just lower your leverage. It doesn't even make sense going in full size, because then you're going to be fighting some bad PA. They went to your destination, yes, but the move really started from up here. It's not going to be in the heart of the move. That's where you could kind of run into some trouble. All right. Now, we get to this BISI, my fault. Let me go back to the 1 minute time frame. And you just simply have to, if you want to catch the upside trade, all you got to do is just wait for order flow to shift back bullish. So one indication that order flow is shifting in your direction is to see the invalidation of the opposite side. So for example, if you see there's like a 1 minute SIBI here, which is supposed to be, once again, something bearish, you want price to reject this if we're truly bearish, right? If we're bearish, price should reject that. Cool. All right, once you see price go above it, price is talking to you. It's telling you like, hey, listen, order flow may be shifting in the opposite direction, because not only did we invalidate that, but look, simultaneously we created a BISI. And would you look at the fact that that BISI actually never got, if I were to be precise with it, never got traded back to. See, we never actually traded back to the light purple area. Nope. That's a good sign. We like that. We like that at the start of a move. That's a good sign. And so now you start looking at things like the buy side liquidity that we engineered, because now order flow is shifting back bullish. So now you're thinking, what is the objective up here? So you start seeking liquidity pools that were untagged, such as these equal highs that were left in the market right here, right? So during the live trade, this became the target on the upside. And I remember saying to the team, like, because I think obviously this is what, last Wednesday, it's a little blurry now, but I remember it consolidating around here. And I'm like, bro, we know where it's going. Like, anytime we consolidate prior to a liquidity pool, we're going to end up running that liquidity pool. What happens after that is a different story, but we're going to get there. Now, I told you guys about when we consolidate after running liquidity pool, that's where you need to be watching out for reversals, when you consolidate after the pool. But if you consolidate prior to a liquidity pool, then you couldn't expect that price is going to actually get to your target. Don't get shaken out your trade too hard. I'm not saying, ignore signatures that's telling you order flow is shifting against you, but don't panic too much either. So let's see how it gets there. All right, so we getting really close to this pool of liquidity, which once again just means like they have relatively equal highs here. Let's go to the 15 second. Yeah. All right, let's go to the 15-second time frame and see that you have a lower high right here. You got a lower high right here. You got a lower high right there, and you have these equal highs. This is a form of engineering liquidity. Now, if this move right here would have taken out this pool first and then done that, that's a little bit different. And you need to have your antennas up, because you might say, hey, you know what? I don't really know what the buy side objective is right now. But they made the buy side objective so clear by the fact that you had these lower highs, meaning that anybody who got in the trade where I just put a circle at, right? Anybody who went short right there, they've been protected. The entire drop down right now, they have been protected in the market. So we don't like that. We need to come and tag them out. They're not going to be protected forever. Look, they're only protected while order flow is bearish, right? They're only protected while order flow is bearish. Once order flow shifts bullish, notice that we're using all bullish PD rates. Do I need to highlight them for you? I mean, you got this BISI here on the 15-second. It's working. Or other retracement. This is just consolidation. Nothing even, I didn't even have to tap into anything for real, because it didn't. It just consolidated and kept going higher. Literally, there's nothing to speak about. We just kept going higher. Even here, you have a continuation OB right here that can send us higher as well. But like overall, order flow is clearly to the upside direction. So you have to ask yourself, what are we targeting? My fault. You have to ask yourself, what are we targeting? Well, that's that liquidity pool right there. That's what we're targeting. Okay, so even if we consolidate here for a little while, you know where it's going. So while we were watching this, I was like, listen, y'all, we not like, don't even trip. They kind of playing a little bit here, but we know where it's going. Once it gets there, then you need to continue to watch signatures and price action that tell you, hey, are we going to continue? Do we start going for this pool right here? This trend line liquidity? Do we go for that? Et cetera, et cetera. You have to go to a higher time frame and say, okay, well, what is it really pushing for? But once again, do I have the expectation that it's going to move much higher than this and start running all of these highs out? No, keep the higher time frame in perspective. So when you see price kind of, I'm going back to the 5 minute now. This is the 5 minute. When you see price do it, first of all, I'm not saying this is tradable, right? You don't have to trade this whole cluster of candles, but what I'm really speaking to is expectations right now. Your expectations for a higher high should have been really low, because the daily time frame and the weekly time frame already gave you perspective on where the market should be heading from a probability perspective, right? So probability wise, you're not expecting a higher high. This would be the most strange delivery ever for us to, I'm back to the hourly. This would be the strangest delivery ever to me, for us to have this large consolidation like this, attempt to leave the range, come back right here, and then do that. That's just not typical. I would say that. So that's why when we came back to that hourly BISI, I figured it would just provide a lower high for the market before the next lower low for the market. Okay. So that's why it's important to keep the higher time frame objective in perspective. So yes, there's a nice little reaction to the discount BISI. That's cute and all, but what did it do? It sent us into a SIBI on the hourly time frame, right around the 50% of that. I'm gonna erase this part now. Y'all understand why we went lower. I could erase that. So yeah, notice that the BISI sent us to a SIBI, which is bearish. That's a bearish fair value gap. And now we starting to trade back to the downside. We start targeting these lows and everything. As you guys, as I told you, this part of price action was not really that tradable. I wouldn't recommend trading this consolidation. Yes, you know it's going lower. Yes, you know it's going lower. Doesn't mean to trade it. When this high formed, mentees, if I'm lying, put it in the chat. When this high formed at that exact time, I said, I think that's going to be the high of the day. That's the high of the day today. The minute it formed. Yeah, all right, David. Stop playing with me. Yeah, on the live chat, we said this is the high of the day. And so the thing is, there's opportunities to, if you have an inkling on the fact that it's gonna be the high of the day, there's opportunities to go short. One of my mentees, Tanisha, she in here right now. I'm not sure if she in here right now. I'm kind of looking real quick, but I don't know. But she actually went short here and just put her stop loss slightly above where the high of the day is expected to be. How do we know where the high of the day is expected to be? It's a phase 2 concept, right? I will say it's phase 2 concept, but I'm just saying that the journey down was not pretty. So the only how you could have really gotten in this, in my opinion, is kind of how Denise did it, to where based on our phase 2 concept, we already knew like price is not going above here today. So she like went short, had a stop loss slightly above, and she just like kind of just rode the trend really, and it goes in your direction. And but yeah, phase two is got some good information, because SMC wise, phase 2 is not SMC, by the way. Phase 1 is SMC. Phase 2 is something else. But like SMC wise, it would have been kind of tough to time this top right here. I would say that. Yeah, phase 2 is dope, bro. David is a phase 2 member, by the way, y'all, in the chat. So yeah, so he already knew what's up. But what you call it? On the 5, yeah, my point in saying that, everybody, is like, if yes, you may expect us to come back to these lows, but that doesn't mean you have to trade it. So if you have another takeaway from today, I just really want to hone in on the fact that just because you know where price is going doesn't mean you have to trade it. If you're frustrated with over trading, blowing accounts, having psychology issues, that's because you're fighting price action. Anytime you feel like you're fighting for your money, it's the one time in life I want you to walk away from a fight, right? Like, I know some of us grew up in areas where you got to fight out everything. This ain't it. Don't do that with the market makers. They gonna win every time. So just don't fight this. Don't fight this. Nasty work. All right, now, and thank you, David. He said the whole mentorship is fire, but phase 2 is crazy. Yeah, it's eye-opening. It's really eye-opening. We actually did that twice this week. At the time that the high formed, we said it at the time it formed, like, yeah, that's probably gonna be the high today, early. But anyways, so that's, what is that? Wednesday, right? Wednesday in a nutshell. Let's get to Thursday. So now, as you see, we're moving lower. We get to these lows. That's beautiful. All right, if we truly want to move lower in the market, this fair value gap is the only thing that should send us lower. Price should not come back to a premium. So for people who learned about discount and premium from all these SMC content creators that just be yapping on YouTube, all the misinformation and stuff, they make it seem as if every move you take or every move in the market needs to go to a premium before the next leg, or it needs to go to a discount before the next leg. And that's just not true at all. It comes from a huge misunderstanding on what real delivery looks like. So if you're saying, oh man, I missed the downside price leg, it's cool, I'm gonna wait for price to come to this premium before coming back to these lows, you are gonna miss out on a lot of plays. And to be honest, sometimes, not even sometimes, a lot of times, you're gonna see price come to a premium and you're gonna go short, but it's a whole reversal and you're gonna be sick because it's a whole reversal. You thinking it's coming to a premium, but no, it's a whole reversal. No. Premium and discount, you need to know when to expect that. I have something called a 4-step process that I've coined on my own. That's a back to a rail concept. I learned that nowhere, but I teach that in phase 1. The 4-step process is something that honestly keeps you on the right side of the market at all times, but it also lets you know when to expect a premium or discount type retracement. So like using the 4-step process, for example, our expectation is definitely not for price at this moment to come to a premium before the next lower low. Stop it. No, we're literally just looking at this to be right here. That's it. So you may notice that overnight what is this? This is Asia. Asia hit this, and then we started to move to the downside. And this is like London we get right here. This is like London on Thursday. Oh yeah, I remember now. My fault. I remember. So this whole drop off happened overnight. We talked about this in class, me and my phase 2 members, because we have class on Wednesday night. So on Wednesday night in phase 2, as you can see, this is like a nighttime price action. I was like, phase 2, we're watching this SIBI for lower price action. We'll see what the SIBI wants to do with price. We wake up in the morning to this huge drop off, and I'm like, you got to let us game, right? But they're annoying as heck because the drop that we would have wanted to catch happened while we were sleeping. So yeah, it was super annoying waking up in the morning seeing this, like, why they did all this while we sleep, right? Like, they annoying, but it's cool. So this is a 6 a.m. candle, 7-8. Well, I didn't mean to show all of that just yet, but it's cool. So getting closer to market open, you see price start to push up, right? Price start to push up. Okay, now this is where you start weighing your cases, right? You start weighing your bull and your bear cases. So for a bull case, as we push up right now, we have to ask yourself, like, okay, first of all, what does the higher time frame tell me we want to do? Well, it tells us we want to go lower, right? So for a bull case, you should just have low hanging fruit objectives. Like, you shouldn't be aiming for nothing super high because the higher time frame told you we should be going lower. So that's for one. But for a bull case, you say, you know what? If we're gonna go higher, price could use this bullish OB to get there. The upper half of it, specifically the upper half of it. So if we're bullish, price will hold the upper half of this and make a higher high. And this is what the pre-market plan was when it came to upside on the NASDAQ. If we failed the upper half of this bullish OB, which is these two red candles before this impulsive move, if we fail the upper half of that, we're gonna come back to run these lows. Simple. Why do we like these lows as well? Pay attention. Notice that we made a higher low before this little rally. So when order flow shifts back bearish, we're targeting both of these lows. Now the difference is if we would have swept it first before doing that, then you may have to be a little more cautious. But when you notice these signatures like this higher low, low-key a mentorship topic, right? So I'm giving something away with that, right? But it's cool. Y'all can have that. Like, when you notice this is something to target, right? That's something to, so it made it just so much more probable. So at this point, it's like, yo, let me just wait for order flow to shift bearish, and then these lows is about to get clapped. They about to get destroyed right away, you know? And me as well, 1242. I be doing the same thing because it's like they make the move without you. It's like, all right, you gotta just like, be like, you know what? No FOMO. I'll catch the next one. So heading into market open, you can clearly see we had a huge consolidation. What did I say about, man, y'all, like, do y'all pay attention in class? Let me know, because we do this every week. Am I talking to myself, right? So look, let me know if y'all pay attention. What did I say about consolidations and how we want to break them? We want to break consolidations with fair value gaps. And typically, those fair value gaps that we make don't get traded back to at first. So I don't really want to see us break the consolidation, come back to it. No, if anything, I want to break it with fair value gaps that don't get traded back to, like you see right here. So can I take a step back and remind y'all about the 4-hour one? Because price is fractal, so it's the same concept everywhere. If we have a consolidation and we leaving the consolidation, do you now see why I said I don't like the fact that price came back to this 4-hour BISI in the first place? If I was a bullish person, so seeing price come back to that in the first place was already, to me, yeah, we probably gonna go lower. I don't even believe in it for real. We came back to this. So do you see what also gave me some inkling that we're probably gonna make a lower move in the market, hence why we did this whole week? Not to mention understanding when the high of the week is expected to form, something we went over in my phase 2 class on Wednesday, understanding that this is probably when the high of the week was gonna form anyways. So there's so many confluences that could give you price direction. So if you're looking on like how do you like be predicting the moves and stuff? It's just so much information and confluences that could kind of make the market very predictable in so many different ways. But anywho, back to the 1 minute. Consolidation. We leave it. SIBI up here, SIBI down here. The one that I really didn't want traded back to, honestly, was the one down here. Up here, this kind of still is consolidation for me. But this one, notice that we didn't come back to that. Not before meeting our objective of running these lows. So let me make that clear too, so nobody has a misunderstanding. When I say that I don't expect these to get traded back to, I'm saying I don't expect them to get traded back to before hitting the objective of the day, or of that price leg, right? Let me say that, before the objective on that time frame. So I already showed y'all how these engineered lows right here, these engineered lows was our target to run out these lows. So I don't expect this to get traded back to until we hit that. So let's say you would have went short, or you would have gone short. Yeah, your stop losses could be based on these SIBIs, because those SIBIs should be a form of protection for you. You don't even expect price to go back there. But even if it did, your stop loss should be right above it, because to be honest, if price did come here, it needs to use it. It needs to use it. If we invalidated it, you are on the wrong side of the market. I'm telling you, it's very likely, probability wise, that you're on the incorrect side of the market. So that's how you can use PD arrays for stop losses as well. So if you waited for the consolidation break and you trusted a bearish breakout because you had a bearish bias from a higher time frame, man, y'all missing stuff. Y'all dazing out. Hear me out. Bro, from a higher time frame, you already had a bearish bias in the market. So when you notice consolidation like this, and it breaks back in the direction of the higher time frame, those are breakouts that are way more trustworthy than counter trend breakouts, right? Right? That don't make sense. Okay, cool. So if we breaking out back in the direction of the higher time frame with fair value gaps, those are the type of breakouts that you can trust in price action. So even if you were to get in down here at like 344, 20,344, but the low target was 20,287, that's 50 something points, right? That's, am I tweaking? No, that's like 57 points, right? That's a lot of money on the NASDAQ. So, and that's just, and that's a late entry, mind you. I didn't talk about entering up here where you could have got almost 100-point move, but even if you entered late and trusted that this fair value gap won't get traded back to, but if it did get traded back to, it still would have been a valid line of defense for you, even if it did get traded back to. That's how you can catch the moves down to your bearish objective. So that's an easy trade, and you could have been done for the day right here. Because 57 points will pay you well. You feel what I'm saying? 57 points will pay you well on the NASDAQ. That's all you needed. And not to mention if it's going lower like it did. So price consolidates a little bit, and then guess what? It continues even lower. So now you're really making money and everything look great. You having a blast. This one price action is fun. All right, so look, now what's next? What's next? After running these internal lows, what are you going to look at besides these lows? What else is priced? Where else will we be going? Just really think about it, right? Where else will we be going besides these lows? It ain't down here for no reason. But one more tip I wanted to give you guys was on this price leg was the whole point of me talking about this consolidation and after the fake rally before the big drop. In other words, an AMD, right? Accumulate, manipulate to one side, distribute to the other, right? Okay. On that distribution leg, the goal is not to make an equal low. It's not to make an equal low. So we're expected to make a lower low. That's really the expectation here. So if we're supposed to go lower than the green wick, you need to look for other bearish objectives, such as this unmitigated 4-hour BSI. So on the live trade with the team, when we were trading this, I said I think it has a little bit lower to go. Like it had gotten to, let's go back to that level. It had gotten to, my fault. Yeah, right here. The green wick. Let me mark it over. It had gotten to this green wick, and I'm like, okay, that's cool, but I don't think that it's gonna stop there at this yellow line, because there's an unmitigated fair value gap there. And you may think, oh, fair value gap, so he wants price to like go there and like make a higher high. No. I'm just simply noting the fact that it's a gap. It's a gap. AMD question. What do you mean by AMD question mark? What about the AMD? If you're referring to what I said before, I was saying that this was the AMD more so. The accumulation here, the manipulation is the upside move, and then we distribute it to the downside. That's what I was saying with AMD. I'm just saying, where does that downside move go? In the short term, I would target this gap in price action. Not for bullish moves, not for like calls, not for buys. I'm talking about TPs. Where am I taking profit? I don't want to take profit at yellow. I want to take profit in blue. After that, price could do what it want to do until the next little move in the market. But blue is a good spot because I want you to notice that this fair value gap was unmitigated, meaning it's never been touched. That's what I mean by unmitigated. So notice that this BISI already got used. It actually got used twice. We came down and then it did what? It used this BISI right here. The second one as well. Those are already mitigated. The one that has not been touched was the third one. So for my mentees that was in that live trade, the reason why we targeted the blue was because this was the untouched fair value gap in that cluster. So along with all the other type of confluences we talk about. And then after that, I mean, I think the week largely got uneventful because we literally bottomed out right there. Please notice that that was the bottom. Please notice that that was the bottom of the move, everybody. It's not a coincidence. Fair value gaps are gaps. Fair value gaps are gaps. What's the third word in fair value gap? Gap. 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 They get filled. Fair value gaps get filled. Gaps. There are gaps in the market. It's not always about taking buys off of them or getting rejections on them. Sometimes you just want a fair value gap to get filled. That's why this was a target. After that, price consolidated. Low probability price action. Stay out of the consolidation. Stay out of this. Don't trade this nonsense. This is how you blow your account. We pop out to the upside. I think I talked about this before I recorded, but I'm not sure. But last thing I'll go over real quick on this side of class is on the live trade. This was a red day here on the live trade, but only by $73. It's all about risk management always. But we had a red day here on the live trade on Friday because let me explain to you my losses here. I want to explain my losses real quick. So look, let's see if I can see this real quick. Where was it? What is this? 930, perfect. All right, so tried a couple trades here. And I'll explain why, right? I'm expecting lower in the market at the time, potentially. I understand we're in a consolidation, and I did give the warning to everybody, like, yo, we're going to use very light size because we're still inside this consolidation. And I don't like trading consolidations because it's low probability everything, as we know. And it's a very tough spot. We had a super impulsive move. We did meet an objective such as that unmitigated BISI. I do expect lower in the market, but do I expect lower right now? I don't know about that. It's Friday before the election on Tuesday, right? FOMC is the following week as well, meaning just 2 days after the election. So it's like, what's the reason price would make an even deeper move to the downside right now? There's nothing really to like be a catalyst for that. So I didn't have too much expectation. So we light size it anyways. But first thing I wanted to check is I wanted to see if we just wanted to come up and sweep these internal highs right here. Sweep these internal highs right here before coming down. So first trade was to wait for that. Price came above it. We went short right here. Price was initially going in our direction. Good. Okay, that looks good at first, but then it actually was going well. And then price started to come back up on us. And I think we took small profits. It's a little blurry now, but we either took small profits or break even or something, but we went short on this price leg. But either way, that was the trade I did. Sweep these highs, come down. I mean, it kind of worked at first. I wanted lower, obviously, and then it pushes up. Cool. That's trade number one. That's trade number one. All right, trade number two. Well, this is the high of the consolidation right here. Right, this high right here is the high of the consolidation. So if I'm bearish, I'm going to try out another bearish setup. So I wait patient on it. The other bearish setup that I would try if I'm bearish from a higher time frame is the sweep of a consolidation. Just like I showed you on the 4-hour, I also showed you an example on the, what time frame is the other one? I forgot the other one, but I showed you 2 examples of this already. So for me, I live and die on stuff that I've seen play out millions of times at this point. So if a minority scenario happens to me, I'm living with those probabilities all day, every day, because I know by the end of the story, I'm gonna be net profitable. So I just wanted to see, hey, if this was the height of consolidation, I'm gonna look for price to sweep that. Price went above it at first, and I'm waiting for like signs that it wants to trade back to the downside. I think I wanted to see it and validate this. This is off memory right now, though. I'm not gonna lie. Once it invalidated, I think we went short. I think, right? Yeah, right. We went short somewhere in this area, but then it didn't hold. Like, it eventually came back up. Once it came back up, it's like, all right, cool. You know what? That's it. That was the last trade of the day. Not gonna force it, because to me, I didn't want to play upside. I only wanted to play downside because it matched the higher time frame direction. I don't want to play upside, but I did give the upside target. I said that this is gonna be upside target for the day. I said, since price is gonna be bullish today, y'all. I said Friday it's probably gonna be bullish, but do I want to ride this trend? No, because it's probably gonna look like this. So I shut down the trade, the live trade after this. I said, yeah, it's probably gonna look like this, but that is the target. If you want to play upside, you could take it to 20,287. And I mean, that's where price eventually went that day as the high of the day. But I didn't trade it though. I didn't want that. And that's what I mean by, just because you know where price is going doesn't mean that you need to take every trade there. That was the high of the day right there. So, yep, that's the recap of last week, man. A whole lot of, right? A whole lot of stuff, and this is where we are right now, and we'll see what happens next. We're kind of still where we left off at, honestly. There's nothing really has happened since. But I didn't want to trade upside now. So cool. Hope y'all got a lot out of that part of class. Now I should show you guys the chart debate, right? Let's get to the chart debate. So, get to the chart debate. I'm gonna show you guys, for people who didn't catch the chart debate, because you weren't in my free community, I'm gonna show you how the chart debate first, and then I'm gonna show you the answer. So let me pause my screen first, pull up the Discord. I'm gonna show the chart debate right now. Actually, let me go to this one. Where is that? All right, so look. So if you missed it, right, this is the zoomed out version right here. Zoomed out version. This is what I'm asking you, what's gonna happen? Are you gonna follow line 1? Are you gonna follow line 2? Or are you gonna follow line 3? Which is the real expectation? So I'm gonna let y'all know right now that that's zoomed out. Let me show you zoomed in real quickly. This is a zoomed in version, same play obviously, but I just zoomed in to where price action currently is. All right, so I'm gonna go back to the zoomed out picture. Oh, I almost deleted that. Okay, so for the zoomed out picture, let me tell y'all right now that line number, suspense, right? You see how I build the suspense? I gotta entertain y'all a little bit. Line number 3 is the least probable answer. Line number 3 is the worst answer on the chart right now to choose. I would say that's the least probable answer. I know I put this one in here, and notice that I don't look. People gonna start changing their numbers. Don't I see the numbers right here? Don't try to switch up. All right, and same thing with people. Well, actually, none of my mentees chose line 3, so I don't even have to worry about that. Literally, no mentee chose line 3. So I was happy to see that, because line 1 and 2 are the most. Look at people changing their stuff. Y'all funny changing the numbers on here. Y'all hilarious, bro. But my fault. Okay, so catching y'all cheating in live action is crazy. But people who are choosing line 3, my fault. That's what I wanted to say to y'all. My fault for being so sidetracked. I put this in here because I wanted to sell that this is an OB. That's not an OB. It's not an OB, y'all. It's not a good OB. I put that here because people think, oh, it's a bearish order block. It's not a good order block. It's not good. So that's supposed to throw you off. You don't even want price coming up here for real. I want you to also notice that in order to get to this green candle, please notice that you would have had to invalidate this fair value gap and the mini fair value gap above it. You would have had to invalidate those two PD rays to get to this disgusting looking order block. That's not an order block. It's not an order block. Don't do that. So line 3 is easily the least probable answer. It's line 1 or 2 at this point. So which one is it? Well, the answer is actually line 2. Line 2 is the correct answer, everybody. It's line 2. Well, my mentees, that was the majority answer, but my mentees, that did have a good amount of people that picked line 1 as well, but the majority of mentees picked line 2. I know why y'all picked line 1. I can see where you may have thought that, but it's line 2. So majority of y'all got it right. And shout out to the free community people that also got it right as well. But that was as people be changing their answers and stuff, but yeah, it's a line 2 ting. Chill my deal, Wes. All right. So look. So if you zoom out, I want you guys to notice the fact that order flow has shifted bearish, right? Order flow has shifted bearish, especially mentees. Without getting into detail, mentees, please, just these highs are telling, right? These highs are telling. So you should already know where we're expected to go at this point, right? You should already know where we're expected to go. So now it's just about PD arrays. But I see this, mentees. I know where y'all got tripped up. I'm sorry, I'm talking about mentees right now. Yeah, I ain't gonna lie for a second. I see y'all got tripped up because of this red candle. This red, like this wick, I know what y'all got tripped up on. But I would say don't give up on the play because we could still use the lower half of this like we did. So this is the picture of what happened. We dropped right away. This is exactly what happened that day. We dropped right away, ran straight to line 2. All right. So this is exactly what happened. We dropped right away. So I would say, although we don't necessarily like the fact that we came back above this red wick, it doesn't mean that the play is dead. And especially when you compare options, y'all should already know, like I said, based on these highs, y'all should already know where we going. So to say line 1 is probably not really the best choice. But I understand y'all rationale. I'm not mad at anybody that chose line 1 per se, but line 2 is definitely the most probable. Let's use this PD array to get us to our destination. I mean, line 2 is the answer. Yeah. Yep. Yeah, I wish I could address the chat more. Maybe I'll go back to it, but right now I got to get to the next part of class. So yeah, those are the reasons. And let's get to the last part of class. I'm gonna try to make this part quick so I don't take up too much of y'all time. So what do we gotta do? We gotta wipe this out. What is this? What is this yellow line? I don't even know. I don't need this. Gotta clean this chart up so we get to the next part of class. And I feel like I don't need any of this, right? By the way, so even when it comes to like building your plan for the upcoming week, notice that we already used this SIBI to make lower lows. So I don't need this on my chart anymore because if price were to come back here, I would not be expecting this to make a lower low again. So it just becomes noise at this point. It's already mitigated. And I'm going to tell you right now, even if it wasn't mitigated, chances are if we came back up here to this little fair value gap right here, I'm not really looking for that to send price back to the downside. So I don't really even need that on my chart anyways. I don't like look at PD rays as out of context like that. It's out of context. This BISI has been used already, etc. It's out of context. We don't need it. We don't need any of this stuff right here. All that is noise. So now as I prepare my chart for the upcoming week, I don't need any of that stuff. You see it's more so now a clean chart. I still want to know where the SIBI high is from the daily chart, which is this yellow line. So we're still working with this daily SIBI currently. And this consolidation, we're still in it. We'll see how things potentially break down or not. So yeah, I'll talk about all that when I get back to the NASDAQ. Now let's leave the NASDAQ for a second and let's get to the dollar. Let's get to the dollar. DXY, important for sentiment, very important for sentiment. Okay, so what's the weather report for the week of November 3rd? The weather report, Monday, expected to be very low probability price action. I really want everybody to consider taking the day off or consider dropping your sizing because Monday does not have high expectations. Tuesday is election day. Election day, we're not gonna really know results until the nighttime for real. So, right? Unless I'm bugging, but if I'm showing my age, just chill. But pretty sure it's night off memory. Like I think it's a nighttime when we start to really know who wins the election. So I don't expect Tuesday market hours like New York session to be much to talk about. Wednesday, PMI is 945. Thank you for letting me know I'm correct. All right, cool. All right, chill. I ain't no youngin. So a grown man or whatever. So yeah, so basically Wednesday, we got PMI. Thursday, FOMC. So Thursday FOMC is a big deal too. So coming off the election, FOMC is gonna be like a great follow up for some trending price action. So I really think like Thursday afternoon, Friday into next week is gonna be fire. It's gonna be straight fire. I think we're gonna have some good PA, good price action. Friday is not to talk about consumer sentiment, I guess, but largely I think the second half of this week should be eventful and like we're in for a really nice full port energy facts. We're in for a very nice little journey here. I think we better be because price has been terrible across all markets lately. So all right, let's talk dollar for a second. All right, we've been sniping the dollar pretty well. Since price was up here, we called every retracement into this drop. We actually called the rally as well. We called the retracement into this BISI before going higher. Everything has been going well. The only thing that we did get wrong was when price came to this SIBI target. What I made clear, it was a target, not something for rejection, it's just a target. I was expecting a retracement before the next move higher, right? That's what I was expecting. But we didn't even retrace that week. We actually just could continue going higher. But we really been consolidating. We didn't really lead this area, to be honest. We still consolidating, and I think it's also, once again, waiting on election, waiting on FOMC. So even for like Forex traders especially, I would be careful trading Forex heading into both election and FOMC because that's really what's going to cause the dollar to move. So obviously I'm talking dollar pairs when I say that. I see we gap down here on the dollar overnight, but I do think we're going to largely stay consolidated until the news events. So I wouldn't really bring much value to this. I know we're kind of consolidating around these wicks here. I do think that we will find our way over these wicks. I do think we're going to go higher on the dollar overall. But when do you want to take that trade? I would say to kind of wait on news events largely. But we'll see. We will see. But I'm definitely looking for some more upside on the dollar. And let's look at the bond market for a second. And why am I going to these things? Because they kind of give us an indication on what to expect, even in the NASDAQ, even in any market, really. When these things are moving, it gives you an inkling on like, okay, that means the stock market's going to move, and crypto and the Forex market, these things move based on the bond market, as well as what the dollar is doing, as the dollar is the most important currency in the world right now. So, anywho, I like to look at the 2-year treasury note. Now, who remembers how we called this whole drop? First of all, y'all may remember how we called the whole rally. Every single retracement on this rally is something that we called ahead of time. We said where it will bounce at. We said where it will go. We sniped the heck out of the upside. Now, when it came to the downside, we just did the same thing again in the opposite direction. But let's talk the whys. How? So when you get to any type of liquidity, I tell you guys, if you get like buy side liquidity, if you run it and then you consolidate, then you could expect downside. So that's how we anticipated the downside here. It didn't consolidate before the yellow line. It consolidated after running the yellow line. That's where you could expect a retracement to come. Now the retracement happens, it breaks down, everything looked good. Now we formed this SIBI in the market. I said when this SIBI formed, I'm expecting price to either leave it open or use the very lowest part of the SIBI to take us lower. It looks like we came to the lowest part of the SIBI, really the VI part of it, and we ended up pushing down, and we continue to push down, actually pretty low. I don't know what happened on these days with these wicks. That looks crazy. I don't know if that's a glitch or not, but those wicks look crazy. But we've been making our moves to the downside. I think we're gonna come for these lows next. So I think the bonds will keep trading down to run out these lows. The thing is though, like, it's just strange. It's like the bond market, right? How does this work really? So this is the price of the 2-year bond. If the price is going down, that means the interest rate is going up. So it's just strange to think like, why and the bond market tends to move ahead of time. It's like, why are bond interest rates moving to the upside? Because if the price, which is what you're looking at the price. If the price is going down, the interest rate is going up. It's like, why are interest rates going up? That's strange if the Fed just cut 50 basis points. That's strange. I didn't plan on doing this, but I'm gonna pause my screen for a second and pull up that website for Market Watch. I'm not Market Watch. Oh my gosh, interest rate, right? Let me see. I want to show you guys something. CME, that's what it was. CME Fed Watch. My fault. This is important. It's something I want you guys to go to this website right here. Look. If you ever want to like get an inkling on like what, yeah, thank you, the Fed Watch tool. It was like losing me. The CME Fed Watch tool, something you could type in on Google. CME Fed Watch tool. This is something you could use to not only know when the next FOMC meeting is, but know the official expectations on what the Fed is going to do in the upcoming meeting. So we have a meeting on Thursday, so let's check it out. Our next meeting is Thursday, November 7th. These are the rate probabilities for what they're going to do. Well, our current target rate is 475 to 500 basis points. Okay, so they're anticipating that we're going to cut by 25. That's interesting. So it's a 98% chance that we're going to cut by 25 basis points right here. So I'm just like, I don't know, let me see December for a second. 450. And then they're expecting another 25 basis point cut in December as well. And without trying to break down this whole website, maybe you guys could figure it out. If you've never been here, it might be a little confusing to you. But right now, it looks like we're expecting 25 basis point cuts in both Thursday as well as December's meeting. But first of all, anything different than that is going to shock the market, which could lead to like, the market does not like uncertainty. So if we shock the market, that could work out bad for us. But I just don't really understand why rates are going up on the bonds here, but then the projections on what the Fed is going to do is to cut. Like, a little confused. But let me not think out loud. All right, so Euro. What is expectations on Euro? So the Euro just gapped up. Looks like they gapped up a little bit. I would stay away from this price action until the news as well. But based on the fact that I think the dollar is going higher, I think Euro will be going lower. If you guys remember our projections on Euro before, we wanted to use this SIBI to go lower, and I think it worked out pretty well. But if you look at price action now, right, it's not looking too good. This is not favorable PA. This is the 4-hour time frame, and we're really struggling to put in any fair value gaps in either direction. And that's why I just feel like maybe stay out of this price action a little bit until the news event. Now, we would want to see this weekly SIBI hold price bearish. I don't want to see this get invalidated. So we're still rejecting this so far, and we want to see if we can continue to reject that. Because if not, you may see a deeper push higher. So we still want to see, but we need weekly bodies to respect it, of course. But just overall, I will watch this general area, that weekly SIBI on Euro. British pound here on the weekly here on the weekly chart. They had a weekly BISI that they used already. So when we come back to it, guess what? It's lower probability because we already used the BISI to make a higher high. So the return to it makes the fair value gap less probability. That's why we traded through it. Cool. we've been had a bearish expectation on this ticker since price was up here. You guys may remember we called for bearish price action on the British pound in this consolidation, and it's been breaking down. We made a bearish fair value gap that didn't get traded back to. I love that. But much like many other tickers in the market, yes, we've been moving, but we've been moving very staggered. I don't like staggered price action. It tends to get swept. So I still keep my eyes open on a potential sweep to the upside type opportunity because of the manner in which we're taking these lows. Mind you, we did come into this BISI here in a discount. So we will see how that works out. It's also a weekly discount BISI. It's also technically a weekly bullish OB, although I feel we already used it with this reaction here. We already used it. So tricky area, I will say, but still I would keep my eyes open on a potential move back to the upside just because of the type of way that we're dropping. Now, is that due to the fact that there's been no news catalyst to make it move aggressively, or are they just simply engineering liquidity? We will have to see. I would just say wait for news and then ride the order flow that you see presented by the news. If it starts pushing up strongly to the upside, then I would target this fair value gap. I would target that on the upside. All right. If it starts moving to the downside, then I would start targeting these lows. Simple. But I would wait for news. Trying to move through these quick. Okay, so weekly SIBI. Weekly SIBI, what did I write that for? Yes, I want to see price use this weekly SIBI to go lower on the New Zealand dollar. I think New Zealand is still trying to run these weekly lows here. All right, if we're going to do that, it will be very nice price action to see us reject this SIBI to take us lower. This is the one you want to use. You don't really want price coming up into a premium, right? This is a time period where you don't want price coming back to a premium before the next drop. We want to use this SIBI right here to take us to these lows. So I'm looking for the weekly candle to respect the weekly SIBI. So we get to weekly lows. Very simple. 4 hour and daily and 4 hour two time frames you want to watch coming out of this area, especially the 4 hour. I want to see the 4 hour start showing like SIBIs in this direction, but then you have an overall destination. All right. It'll go lower than that too, right? If it's equal lows, do I want another third equal low? No, I'm looking for continuation. So I'm expecting a lower move than that yellow line. USD CAD. Man, did we not snipe the heck out of this? USD CAD is showing you a clear. I want to study this for a second. There's takeaways from this. It's showing us what a true reversal may look like, and showing you guys not to ignore signs and price action. So when price was consolidating on this bullish order block, we were bullish on USD CAD. We wanted it to come up and run this yellow target. We stayed bullish the whole consolidation. Now, when it came up here, it was a very choppy move up, especially if you look at a lower time frame, you'll realize that this move is choppy on the way up. Maybe you can view it with the daily time frame. Like I can see it with the daily, but to see it even better, you might check out a lower time frame than that. Cool. But what that told me is because it's choppy on the way there, once we hit the target, it's going to be a sweep. So that week on the watch list, we said we're going to sweep back to the downside. Now we moved. Okay, this is such a strong move that it's very tempting to think that we're going to run these lows next. I would not be mad at that analysis, but this is what I mean, where you can't just ignore signs and price action that things are shifting on you. So to be honest, and mentees may know what I mean when I say this SIBI here was the thing that told us what will come next. I'll give it room for this green candle. I'll give it room for this green candle right here. I actually said this at the time, if you guys remember. I said, if we're going to be bearish on USD CAD, we want to reject this SIBI and also maybe this green candle. We went above it, bad sign. Okay, but we still dropped. All right, cool. Maybe I was too conservative on the retracement, whatever. Hey, once we swept the previous lows and did not continue, your antennas should go up, because in a downtrend, I don't even trade traditional market structure, but what do we learn in traditional market structure? That price makes a low, a lower high, and a lower low, right? So if you do a sweep instead and you start to push up, maybe things are shifting over and you're no longer bearish. Just maybe. You still need to look at how we're moving back to the upside. So the first part of it is a little weird, but notice that on this Thursday candle, we started to move to the upside. And then this Friday candle is green. Cool. So we made a fair value gap. We had a watch list after this Friday candle formed because watch lists are on Sundays. So after this Friday candle formed that I circled, I said, all right, if we're bullish on this ticker for real, this fair value gap will not get traded back to. And we're going to move past the halfway mark of this wick if we're bullish. And if we move past the halfway mark of this wick, this ticker is going to make a strong push into this blue area minimum. That's why I put first target minimum. So this is what I mean. A signature that we're ready to make that move is this fair value gap staying open. Once it stayed open and we move past the CE, I said CE, really meaning the 50% of this wick. My fault for the terminology, y'all. I meant to say the 50% of that wick. Once we move past the 50% of that wick, that's also signs to you that we're really truly bullish. And so when we move higher, now you have an automatic destination. Price stayed bullish on the other side. All right, well, then we going for these highs instead. And we ran there and now target hit. We just ran them highs. All right, so now what's next for this ticker? For this ticker, one, I'm going to say it again, like I said before too. Not a fan of how it's moving now anymore, because notice that we not making fair value gaps no more. It's getting real choppy. I do like the fact that we reacted to this baby fair value gap though and move higher, but what's true bullish order flow? Bullish order flow is not just using a fair value gap, but it's making another one shortly after. We haven't made another one, so I'm just watching this a little warily here. There's another liquidity target right above it at 1.39775. You could watch that, but definitely a chance that we could trade back to the downside shortly after running that. So, once again, I think it's smartest for Forex tickers to wait for the news events this week, because that's when you're going to get trending price action. I largely feel price is going to consolidate on Forex until the news drops, so I will be careful. But yeah, nothing I want to say on USD, JPY. So I'll move on from Forex. Let's go to crypto actually real quick. But hopefully Forex, you guys, understand my sentiment there. So here on Bitcoin, look how even they are. They teased all-time highs at everybody and then started pushing back down real strong. They funny for that. But I will say this push down has no bearish fair value gaps on it. Maybe a baby one we're trying to make right now. See, a very small one we're trying to make, but I don't even count that. The way back down is very suspect. So, Bitcoin could absolutely find its way back to all-time highs. But what does it do after that? To me, if it does do that, I still think it's going to end up being somewhat of a sweep, because I think Bitcoin is most likely going to trade back to the downside. It might not even do that. It might just go there right away. But either way, I'm not really bullish on Bitcoin. I don't care what happens inside of this consolidation that we still a part of right now. Tiffany said crypto's a fat L. Yeah, crypto is dirt, right? It's been dirt all year. Like we've been watching how bodies have held our weekly fair value gap the entire year. Like the whole year I said, yo, if Bitcoin is gonna go bullish, the bodies need to hold this fair value gap for us to be bullish off of it. But to be honest with y'all, I would have wanted to see it work like this, not like this. Right? I didn't want to see this. That's not what I would want to see for continued bullishness. So the way that it's moving, especially because if you pay attention, you'll realize what I said before, which is if you consolidate after running all-time highs, that's not a good sign. So let's understand that Bitcoin's previous all-time highs was right here. See, it was right there. We ran all-time highs and then we consolidated. That's just never a good sign to me. So I see it on all types of time frames. I showed you guys a million examples already. So that's why I kind of lean towards Bitcoin still trading back to the downside. But if it does push upside, if you look at my screen, these are targets I would have upside. 95.7, 122.5. But do I think that's going to happen? Nah, I would not be surprised to see crypto find its way back to the downside, honestly. Going into the 30s area. At all. Wouldn't be surprised to see that at all. Like at all. Okay, especially because Ethereum is showing you a divergence where Ethereum never ran their all-time highs. So if you're a crypto follower, you should be concerned with the fact that if my thing stopped lagging, that Ethereum never ran all-time highs, but Bitcoin did. And Ethereum invalidated their weekly BISI. They invalidated their weekly BISI. So that's not good. That's not good, because this is what would have been favorable for Ethereum to make an all-time high. We needed that BISI to work out. Once it didn't work out, yeah, it's hard for me to be bullish on crypto right now for those reasons. But we'll see. There's still a lot to be determined. Now let's go Nas, and I'm gonna try to fly through this last part. All right. So Nasdaq, y'all kind of already know my sentiment on Nasdaq, because it's been the same since August 25th, like I said, really, which is I'm just still looking for a price to reject this SIBI to go lower. You said my Bitcoin theory is interesting. Yeah. We'll see how it'll play. We will see. But I don't want price coming back to this SIBI if we're truly bearish. This daily SIBI, I don't want price coming back to it. Do I think it will? Wouldn't be surprised at all, because I don't think we're ready to move yet. I think they're gonna wait until either FOMC or like maybe a little bit post-election, because I don't know. Like right now, election is Tuesday, so Wednesday I feel everybody is gonna come in the market trying to short, trying to go long. I just feel like they're just gonna still play around. I think the moves will come when everything kind of settles a little bit more, and maybe when FOMC is over. So I wouldn't be surprised to see it still consolidating here just a little bit. But I do lean downside. Of course, my sentiment has not changed. It's hard for me to believe in moves that look like this. I've been vocal about that for so long now, and we've been engineering lows for the longest. This is nonsense. This is just liquidity that we're looking to take in the future time, which we're waiting for order flow to shift bearish, because then we would target here and target here as well, which is in alignment with these lows. So I'm looking for a big move. As you see in the purple area, it says BISI that I expect to get traded through. Why? Because yes, this is a fair value gap in discount, but I don't think this is going to take us to new highs. Here's why. Every time frame has to make sense at the same time. So although when you look at the daily chart, you can see this happening and say, yo, that makes sense. Daily discount BISI, like, yeah, that makes sense. Does that make sense on the weekly to you? That's how you got to look at it. Does that make sense on the weekly to you? For the weekly to bottom out right there. And whether or not it happens, I'm talking probabilities. I can only teach probabilities to y'all. So even if it happens here, this is a minority probability. Anything I'm talking to y'all about, I've already studied at an obsessive level. I know what a minority occurrence is versus a majority. A minority occurrence would be for price to bottom out right here on the weekly time frame and then make a higher high like that. That'd be a minority occurrence. You can have a reaction here because it is an inefficiency that we can react to, yes, but it will probably react next to a bearish PD array that will take us lower. So it'll end up looking like on the way down, we would have a SIBI here. This SIBI would take us lower. BISI takes us to SIBI. SIBI takes us to new lows. That would be the expectation, really. But the BISI taking us to all-time highs, nah. Minority scenario. If it happens, it happens. So probability-wise, it doesn't make sense on a weekly to bottom out right there. There's no PD array here that we would want to see. No, we looking for price to run a lot lower. Yo, phase two, I also want you, phase two members, I want y'all to peep this candle right here, phase two members. See that green candle on the weekly? That's interesting, ain't it? Yeah, that's interesting, ain't it? If we go downside, come on now. If we go downside, it'd be pretty solid. All right, right. So, all right. So look, ES. Yeah, y'all see it. Phase two, see it. So ES, same vibes, looking for price to break down here. Might consolidate a little more, but I'm still looking for the breakdown. We have minimum targets would be these fair value gaps, right? Minimum targets. Either of these two, they're both unmitigated. Minimum targets, I think price goes here. I think price goes a lot lower overall. Same sentiment as NASDAQ. I would just follow the NAS. My fault. Let me go back to ES for a second. It's never good to run highs and then consolidate. I just told y'all about that. So the whole move up was suspect anyways. I don't believe in upside right now. YM, which is the Dow Jones. Last week's plan, I said I'm expecting lower on the Dow Jones. I don't want it to come back to this VI. I don't want to come back to this VI. I expect us to use this SIBI and just make this be the high, and we'll go lower. Cool. That's what's happened. This was indeed the high. This happened on Friday already, but I didn't want price coming up here. We could consolidate, whatever, but we need to drop after, and it's been happening so far. This is a minimum target. I still have us going here minimum, but ultimately lower, of course. I don't think we're gonna like bottom out here, but I still think this is a minimum target. So to me, there's just still more downside coming, even on the Dow Jones. On the Russell, I could say the same thing. I think the Russell is gonna run these lows. Just wait though, right? We're still in consolidation. Just wait. Please just wait. There's a lot of news coming. Just wait. I got what, 2 more tickets to show. The Nikkei, man, the Nikkei. We've been since August 25th. I also have been saying for the Nikkei to top out here on this weekly SIBI. It's just been stuck here, man. It's just been stuck. It's just simply been stuck. The market has been stuck, everybody. But this is the high. My sentiment hasn't changed. There's nothing that tells me I should change my sentiment. I'm still looking for price to stay below this and end up coming to these lows all the way down here. Yep. So we'll see how that play. CL, stay away from it until we get direction. CL is dirt. Like nothing to talk about on CL. Still consolidating. Gold. We gotta talk gold for a second. I swear I'm gonna take a minute on this, bro. All-time highs on gold, right? All-time highs on gold. So if you don't believe me when I say the market is rigged and that price is predetermined, then how the heck could I find targets at all-time highs like this, right? Price never been as high, but when price is down here, I gave a first target. I gave that to my mentees, but to the free community, I gave this target too as well. So even last week, I said, yo, wait for price to break this consolidation on the 4 hour. And after that, I would target 2798.6. We never been this high before, right? Never been this high before. Why? As soon as price came to the target, all of a sudden price breaks down super hard. Like this is the hourly. I'm on an hourly time frame, bro. This ain't no 5 minute, bro. This ain't no 1 minute. It's the hourly. There's something to it, right? It got to be some type of knowledge that I know about that can show like, maybe it's not just buying and selling pressure and some type of news came out coincidentally at a target that I called way beforehand. I didn't say this when it got here. I said it when price is down here. I said the next place gold is going is 2798.6. Even before I called this target, all these things are before they get there. And remind you, we're at all-time high. We've been at all-time highs. So my point is, open your mind up to the fact that what you've been taught, it might be a little bit more. It's like it's smoke and mirrors. It's smoke and mirrors. Spot. Oh, my fault. Let me just speak on gold. I didn't even tell you where I think gold is going. For gold, something to watch for gold. I'm actually doing this live because I never even like look for the next spot on gold for it. So gold, I'm looking at, it's coming back to this busy for, I'm not gonna say for sure, but I don't like saying stuff like that. Probabilities wise, I would look for it to come back into this busy, and largely, I think it's gonna end up going lower than this busy. But let me just double check something. We may come up and balance this weekly wick first. We might come up a little bit more before going lower, but I think it does end up going lower into here, and then it's likely to go under that busy, to be honest. So on some short-term vibes, I think gold goes under this busy for real. And to be honest, if it's going under this busy, it's probably gonna end up coming into these lows. So I think gold actually has a pretty decent downside move that could come into it, but it might consolidate a little bit first. So we gotta be patient, but it might consolidate a little bit first. Like I said, there's a long wick that I think we want to balance a little bit first before making a move. So just kind of let gold figure itself out because it might consolidate in here. So don't get chopped up, but be on the lookout for a big move back to the downside on gold. And SPY. SPY. Same thing I said on ES, nothing much more to add. I would love if this gap never gets traded back to. If this gap does not get traded back to, I would be in love with SPY for a lot more downside. If it does get traded back to, I would just be cautious. I'm still not bullish, so I would just be cautious of chop until we make our move for real. But if we're bearish, we won't even trade back to this gap. Price will just start dropping. That would be lovely. And ultimately, same thing I said on ES, short-term targets would be either of these two fair value gaps. So that takes you to at least like 559-ish, around there, minimum. That's why I think SPY goes in the short term. QQQ, I hope we don't run all-time highs. I hope we still keep this divergence, which means S&P ran all-time highs, while the NASDAQ does not run all-time highs. That's the goal. QQQ still has it running. Same thing I said on the SPY. I hope this gap remains open. I hope we don't trade back to that. But ultimately, I would be on the lookout for daily bearish fair value gaps. If we start making daily bearish fair value gaps, QQQ is likely to not just come here minimum, right? But really, I expect it to run these lows and ultimately those lows. So those are it's my overall analysis on the whole market. We done broke everything down. I done talked so much that I feel like I just worked out. Like I just did an ab workout. That's how I feel. That's all I have, man. If you're watching this on YouTube, definitely subscribe to the channel, like the video. Check the links in the description because I got a free community where you can join this Zoom, chat in the Zoom, talk, stay after the Zoom, ask questions every day, get daily updates, everything, man. And a whole lot more coming to the community. So join that link. It's for free in the description right now. Mentorship, if you want to be down with the mentorship, that link is in there as well. You can be up on Instagram, DM me any questions. I answer all DMs. And with that being said, man, that is all she wrote ski.